The Aberdeen UK Mid-Cap Fund is, by definition, focused on UK mid-caps. So for us, those companies have to be UK listed. We do not invest in unprofitable businesses. And when we talk about mid-cap, we tend to think about FTSE 250 ex-investment trusts, plus any similar market cap companies which are listed on the AIM market. The portfolio tends to hold around 50 stocks. We have run the same investment process in our smaller companies team for over 25 years. That is focused on quality, growth, and momentum. When we're looking for quality companies, we're looking at balance sheet, we're looking at competitive advantages, we're looking at the quality of management teams. We like companies who are delivering sustainable growth, and we also believe in momentum, so in particular earnings momentum, companies getting earnings upgrades. We have a longer term investment focus, so for new ideas we tend to think about a 3 to 5 year time horizon. We also really focus on management quality by engaging with companies, and we're also valuation aware, so that is part of our investment process. The last thing I would highlight is the use of the matrix, which is our stock screening tool. The matrix in the UK is composed of 12 different factors, and importantly, those are focused around our investment process. So sitting around buckets of quality, growth, momentum, and also valuation factors. We use it in a few ways. We use it for screening for new ideas. We use it in terms of portfolio construction, and particularly challenging in that sell discipline. And also, we can use it in terms of making sure that the behavioral biases that you get in investment can be eliminated. So I think with our fund, one of the key risks investors should be aware of is the style exposures that we have. By definition, we're very clear to clients that we follow a quality, growth, momentum investment process. And that means that some periods of markets can be more challenging for us. Those in particular are times when value stocks are very in favour, when cyclicals are doing particularly well. I think another risk people should be aware of is just when the UK market is out of favour. And we've very much been through that period in the last few years. So hopefully there's upside from here. And I think another thing is that we will always have style and factor exposures, but we make use of the matrix and the equity risk tool to make sure we're using those effectively. This fund isn't a specific ESG fund, but it is integrated in our research. So in every meeting we're having with companies, we are discussing ESG factors, but importantly, those which we feel as analysts are most critical for the businesses. We do look at also ESG external ratings as well. And I think one of the most interesting things actually we find is that through the discussions we have either in our normal company meetings or in ESG specific meetings, we find we actually learn a lot more about the fundamentals and operations of the business. As we see the macroeconomic environment evolve, we believe as we see interest rate cuts, it should be a real positive environment for our small mid-cap portfolios. Typically, when we've seen history show that interest rates are cut, we've seen that be positive for UK markets, absolutely, but also importantly for small and mid-cap to outperform relative to large cap. We also believe that over the long term, the active exposure in small and mid-cap funds has generated really positive alpha. One thing that we see from clients is increasingly the use of passives, but what we do see is most clients are allocating that space towards the large cap exposure and are still very happy to take that active risk in terms of investing in small or mid-cap portfolios and stock picking. And the last thing that's really important for clients is that we've always been clear on the investment process that we run, and we run that through economic cycles. And we believe that helps clients to understand the type of market environment that our portfolio will perform best in, times it might struggle in, and importantly, how they can blend that with other exposures that they have.